Hello. Let us start with the first question itself. Here I have taken the basic data of the question and here I will explain some basic terminologies. Right. Fine. First thing, first thing. We have taken the basic data. Right. This is your balance sheet and this is your P&L as per your question. Fine. Now, what do you mean by balance sheet? Balance sheet is nothing but a statement of assets, liabilities, and capital of a business. Right. In the left hand side, we represent assets, and in the right hand side, we will represent liability. Now, balance sheet always should be tallied. Means if total balance of the assets is 10 lakh for the equal, the liability also should be 10 lakh only. These both numbers should be same. Assets equals liability. Always should be assets equals liability. Shall I give one example, one or two examples? Oh, it will get tallied. Just a second. So this is your asset. Let us say you have bank balance. Let us say this is assets and liability. Right. Now, let us say bank balance. You have 10 lakh rupees. What is assets? We'll discuss later. What is assets and liability? Let us understand the balance sheet first. Right. You have a bank balance. Means your company's bank balance is of rupees 10 lakh. Fine. Right. Now, with this 10 lakh, you have purchased some furniture. Let us say some furniture. It is also asset, right? Furniture you have purchased for 5 lakh. For 5 lakh rupees, you have purchased a furniture and you are paying through the bank balance of your company. That's fine, right? Now, if you pay if you pay for the furniture through your bank account, what will happen? Your bank balance will go down or it will decrease. Fine, right? From your bank balance is 10 lakh. If you pay for furniture of rupees 5 lakh rupees, we should minus it. The remaining bank balance of your company is 5 lakh, right? And now you have purchased a furniture. It is also asset. We should show in the asset. Fine. Furniture we have written, and for the same whatever we have purchased for 5 lakh, we will show it here. Now the bank balance will be 5 lakh. So obviously earlier it was 10 lakh, now also it is 10 lakh. Did you understand this? Now the next one is let us say you have a cash balance, cash or bank, anything, cash or bank balance, both are assets, obviously, of rupees 10 lakh. Now you took a bank loan, for 5 lakh. You took a bank loan of rupees 5 lakh. Is that a liability? Yes, obviously we should repay this amount to the bank. Obviously it will be liability on the company. Yes, we will show in the liability side. Bank loan, obviously it is liability. Yes, 5 lakh rupees. on the liability side. Fine. Now, if you total these assets and liability, obviously, if you have some cash or bank, anything, the same balance will be here also. Leave that amount. Now, how it will tally? You took a bank loan of rupees 5 lakh, fine. Now, the bank loan, whatever loan you have taken, that loan will get credited in your bank account, or it will get they will give in a cash basis, right? Whatever it may be, you took a bank loan, they will credit that loan amount to the bank. Obviously, cash or bank balance will increase. Cash or bank balance will increase, obviously, yes. Now, here we will add 5 lakh rupees because we have received 5 lakh rupees through the bank loan. Obviously, if you take the bank loan, the liability will increase. So, on the liability side, we will show 5 lakh. Right. Now, here also 5 lakh came and here also 5 lakh came. It will get tallied. That's the balance, basic balance sheet. Right. Okay, fine. We have understood what is balance sheet, but what do you mean by assets? What are those assets? What is asset? Right. Any resource owned by a person or by a company on which we have control. Means it may be your mobile phone, it may be your laptop on which you have control, that will be your asset. Fine. That may be cash, bank balance, furniture, building, whatever the machinery used in the company, your company, patent if you have any, goodwill of the company, copyright if you have anything, jewelries also become assets. These are the assets. Then what is liability? Liability is nothing but it may be bank loan, it may be bank loan on which, means if we take loan, if we or our company takes loan, we have the liability to pay, right? We have the obligation to pay that amount. And also equity shares and short term loans, long term loans, creditors, like these are the liabilities. Fine. Did you understand that? Next, what is P&L? Normally in the P&L we show expenses and incomes of any company, right? On the left hand side we will show the expenses. This is your expenses, whatever, if you have any expenses we will show in the expense side. And if you sell something, that is your income. And if you have other any incomes, we will show it in the right hand side, that is income side. Fine. Do you understand these things? Make a note of these things. Let us move to the question. First thing, we should understand the basic data. Whatever they have given, we should understand that. Fine. This is your balance sheet. Already you know what is balance sheet. Fine. Now, on the right hand side, that is on asset side, the first thing is fixed asset. What do you mean by fixed asset? Fixed assets are nothing but tangible assets. It may be your company's furniture, building, land, vehicles, whatever it may be. Those kind of tangible assets which we can touch and feel, that is called tangible assets. Those will be under fixed assets. And also investments. If you purchase any machinery, something like that, it will be your investment, right? You are investing on machineries, that will be called as investment. It comes under fixed asset. Then inventories, like if you start any business, any production business, For that, you may have raw materials, finished goods. Those will be your raw materials, inventories, and receivables. Like if you sell something on credit basis, that person should pay your company. That will become receivables, but not yet received. It will receive in the future. Fine. Then bank account, whatever the balance you should whatever the balance in the bank in the name of company, that will be bank balance. Fine. And next given is equity is nothing but shares of the company. So if you purchase Tesla shares, whatever the company, it will become their equity, Tesla's equity. Fine. Right. Provisions are nothing but some amount kept aside for the future expenses. Right. Liabilities, other liabilities, it may be current liability, short term liability means within 12 months, if you pay the loan, it will become short term liability. If it exceeds the 1 year, means 12 months, it will become long term liability. And if you take any bank loans, it will come under liability side. And total equity and liability 50 lakhs and asset will be 50 lakhs. Both should be equal. Right. Next, in the P&L, material expenses. If you have purchased any materials for your production, that will come under expense side in the P&L. And personal expenses, like if you pay salary, wages, like that, it comes under personal expenses in expenses side, in P&L account. Depreciation is nothing but reduction in the value of any asset. Like if you purchase a laptop and you will use for a year, 2 year, whatever it may be, you may use for lifelong or few years. Right. For those years, if you purchase a laptop today for 70,000, next year the price of that laptop will not be 70,000. Fine. If someone wants to purchase from you, they will purchase for 50,000 or 40,000 lower than what you have purchased for. Right. If you purchase for 70k, they may ask for 50,000. That means 20,000 depreciation on the asset, reduction in the value of asset. Other expenses, small expenses will be there in the company, that comes under other expenses. And interest expenses, if you take any bank loans, if you pay interest, for those interest expenses comes under interest expense on P&L expense side. And turnover and sales, if you made any sales, it will become income, it comes under P&L income side. This is the basic data of your question. Right. Let's go to the first adjustment. The first adjustment you can see in the board here, which I have represented. Now shall I read that? I made that question short, crispy. The first thing you can notice that machine purchased on 1st April. Your financial year starts on 1st Jan to 31st December. Is that correct? Yes. You have purchased machinery on 1st April. Right. After 3 months, you have purchased a machinery. Right. Next, startup is carried out in the following month due to the necessary activities. Means you install the machine, but you are using it from the next month, that is from May. That is your put to use date. 1st May, put to use date. Fine. Did you understand these? Yes. Investment amount inclusive of expenses for the installation, everything includes whatever the installation expense, transport expense and total machinery cost, everything includes in the 9 lakh rupees. Fine. For the machine other also, okay, fine. Amount paid by the bank, whatever these 9 lakh is there, you have paid through bank account, which means your bank balance, whatever the balance is there, will go down, and whatever the machinery we have purchased, that will go to the fixed asset. Fixed asset, there we will increase the balance of 9 lakh rupees. Now, useful life of a machine is 10 year. Whatever we have purchased the machinery on 1st April, useful life of that machine is 10 years, right? Now, shall I make it short? So what is the data given? 1st April you have purchased, 1st May put to use, then for how much we have purchased? For 9 lakh, and useful life 10 years, right? That machine can be used for 10 years. Now let us go to the solution. First, the basic data is given here. Balance sheet, fine. This is the balance sheet. First thing, we have purchased a machinery. Is that correct? It will be an asset under fixed asset. Means it can be used for many years. Means 10 years. Right? If you use a machinery for less than a year, means less than 12 months, it will become your current asset. But we are using it for 10 years. That will become your fixed asset. Anything, if you use any asset, if you use more than a year, it will become fixed asset. If you use less than 12 months, it will become current asset. That's it. Means we have purchased a fixed asset. Fixed asset, they have given 15 lakh. There is a asset, fixed asset for 15 lakh already. Then we have purchased a machine for 9 lakh. For 9 lakh. Is that correct? Yes. Now, if you use a machine for 10 years, means it will the value of that machine will decrease. Is that correct? Yes. Fine. For 10 years, we are using rupees 9 lakh total amount of the machine, and we are using it for 10 years. The depreciation per year is 90,000. Per year depreciation is 90,000. Is that correct? Yes. Are we using that machine full year, means 12 months in the current year? Obviously no, because we have purchased that machinery in the April, so we can use it for 9 months. But they have mentioned a point. The machinery put to use date is from 1st May, means we are using the machine from the 1st May. Means we should calculate the depreciation for just 8 months, not for the 9 months. We should calculate depreciation for 8 months. 90,000, right? For whole year depreciation, means 12 months, 90,000 depreciation we should charge. But we are using it for 8 months only in the current year. Means into 8 months we are using on 12 months. It will become 60k. means 60,000 of depreciation. We should less it. It will be investment. Depreciation on investment is 60,000. How much it becomes? 15 lakh. Now we have purchased for 9 lakh, and then we should charge the depreciation of rupees 60,000. We should minus, because the value of that machinery is decreasing. We should emit that amount minus 60,000. 23 lakh 40,000. 23 lakh 40,000, that is 23.4 lakh. Did you understand this calculation? Yes. Shall we move to the next one? Next, I should write the P&L, profit and loss. Or else shall I use this profit and loss? Fine. Now fixed asset is over. Next. Whatever inventories, is there any change? No way. Inventory will be same, 10 lakh. Next, receivables, is there any change? No. How much it is? 10 lakh again. And bank account, is there any change? Yes, obviously there is a change, because the 9 lakh whatever we have paid for purchasing the machinery, we have paid through the bank. The bank balance will decrease. Obviously, if we pay, the bank balance goes down. We should minus 9 lakh. Remaining 6 lakhs of bank balance will be there. Fine. Did you understand that? Right. Okay. Is there any change in equity? Yes, there will be change. If there is any loss or profit, we will add from the P&L. I will show that. How much it is? 9 lakh rupees already is there. Provision, no change, 1 lakh. Liability, other liability, there is no change, 10 lakh, because only one asset is getting involved. Bank loan, 30 lakhs remains same. Now, shall we go for the P&L account? Right. Material expenses, there is no change. That 50 lakhs. Yes. Material expense, remains same, 50 lakhs. Personal expense, no change, 26 lakhs. Then depreciation, is there any change? Yes, obviously there is a change, because new depreciation we have calculated and minused here. Now, whatever the depreciation on machinery, it will be our loss. Obviously it will be loss for us. Yes, the 60,000 we should show in the P&L expense side, because it is an expense for us, right? So depreciation is a expense. We have shown 3 lakh, and for that expenses again we are getting 60,000. One more loss on depreciation, we should add it back, add it to the already added to the depreciation on investment. It is 60,000. It becomes 3.6 lakhs, that is 3 lakh 60,000 it becomes. Fine. Now there is no change in the other expenses and interest expenses. Both are same. Other expense 3 lakh and other expenses 19 lakh, interest expenses 2 lakh. There is no space. Other expenses, sorry, 19 lakh. Then interest expenses 2 lakh. Total how much it becomes? 50 lakh plus 26 lakhs, 3 lakh 60,000, and one more 19 lakh and 2 lakh. Total asset side means, sorry, total expense side is 10 lakh 60,000, sorry, 1 crore 60,000, not 10 lakh, 1 crore 60,000 is the expense side total, right? Next, on the income side we have sales or turnover of for 10 lakh itself. Is it 5 lakh or just a second, I'll check it. The mistake is total. It is not 10 lakh, it is 1 crore. It is not 10 lakh, it is 1 crore. Total P&L total balance is 1 crore and sales was 1 crore. Fine. Now it is the total expense side is 1 crore 60 lakh and the total sales is just 1 crore. Our expense exceeds the income. If expenses exceeds income, obviously it will be loss. If our income is 1 crore but expenses is 1 crore 60,000, excess 60,000 will be our expenses. Obviously expense field, there is no space, you write it down after income, right? 60,000 we should show the expenses, and whatever the loss is there should show. Whatever the loss is there we should show after income. 60,000. This 60,000 goes to the balance sheet under equity. This 60,000 whatever we have gotten the loss, that will go to the equities. We should less it. If you have profit we will add, now we have loss we will minus it. 60k, 8 lakh 40,000 will be the total equity. Now your balance sheet must be tallied. 23 lakh 40,000, 10 lakh, 10 lakh, 6 lakhs. It comes out 49 40, 49 40, 49 lakh 40,000, 8 lakh 40, 1 lakh 30, 49 40. Both are tallied. Assets equals liability. This is your first adjustment completed. Let us move to the second one.